How to consistently grow a small account. This is a TheoTrade presentation. Once again, my name is Don Kaufman, so welcome everybody. Quick risk disclosure, we're not financial advisors, nor a broker-dealer. I spent a long time in the brokerage business, so I'm not in the brokerage business anymore, and I'm quite thrilled to be out of that. The next thing is this is a copyright disclaimer. It's ours. It's not yours. One of the reasons we also throw this up here, and I always like to detail this. Listen, if you're brand new here tonight, first of all, the TheoTrade offices are located in Scottsdale, Arizona. People go, why not Chicago? Because I've lived in Chicago, and it's lovely in April when it snows in Chicago. Okay. And by the way, if you're going to be quarantined, I'm pretty sure Scottsdale's not a half bad place to be quarantined at. The real reason I throw this up here, listen, support at TheoTrade.com. Okay. If you need to get a hold of me specifically, and it's okay, you can put Don in the heading. You need to get a hold of me after tonight, go to support at TheoTrade.com. We use a common inbox, and I want people to know that you can email us, and we get hundreds of emails a day. It's okay. That's what we do here. We answer emails. We answer trading related questions. Next thing, well, this is why you're here. Listen, tonight, you came here to learn something, okay? And when I talk about trading, I want you to be able to walk away with something specific, something that you can, it's not just about taking something home, right? I learned this, I learned that. I want you to have something tangible, something you can actually take into the market literally tomorrow and use tomorrow. And that's kind of the goal for me. Every single time I do one of these webcasts, I want you guys to be able to walk away with something. And I hope you are here for the same. So a couple of points that I want to make. One of the first things that I'll talk about tonight, traders, investors alike outright fail. And we're going to talk about that. We're going to talk about some different fail points and a lot of the strategies they embark upon to hit some of those fail points. I hope that that's all right with everybody, because there are some big misconceptions in this business, and you're going to find that, I think, quite interesting. I actually like to talk about some of the fail points out there. Number two, why you need to be cutting risk. Got to cut risk, especially right now, in order to produce consistent 55% plus returns surrounding very high probability movements in any stock, any ETF, any index. Okay, we're even going to talk tonight a little bit about the energy sector. Number three, we're going to be talking about growing an account with high degrees of consistency. In fact, I'm going to show you a bunch of different screenshots from my own account. I hope that's all right with you. We don't just talk about trading. We trade. There is nothing that I will discuss tonight whereby I do not have skin in the game. I want to make that clear again. There is nothing that I will discuss tonight whereby I do not have skin in the game. What that effectively means is everything I talked about tonight, these are trades I've done, trades I have on, okay? So again, we're going to talk about consistency in a world filled with volatility. Number four, how you can trade without having to continually monitor the positions. Specifically this evening, set and forget it, all right? We're actually going to use some good till canceled orders and again, high probability strategy. So before I get too detailed into it, our gift to you, we like to do this. We like to do this to encourage you, obviously, to stay to the end of this webcast. But if you stay right to the end of the webcast, we are going to provide you a link. That link will give you access, okay, to the SPX expected move indicator. Frankly, I want everybody to have the SPX expected move indicator. This is something I talk about just incessantly on any of the weekend videos, any of the evening videos we do. I mean, when I trade, I'm going to give you 3 years. Tonight, we're going to give you 3 years of weekly expected moves. All right. All of them have been hand calculated by me. I literally sit there and draw the lines. The indicator literally changed the way that we view the markets. It's $197 value. We give it to you. We give it to you because we want you to stay tuned. And moreover, I reiterate this all the time. I want everybody to have the indicator, and what the indicator is and what it does. Well, this is actually what it looks like, but to give you a little bit of detail, okay, what you're looking at, these three little lines, that's the expected move. Okay. So that is a weekly expected move. It's ranges, right? It's ranges in the SPX and the S&P 500. And those are derived from options. And these highlighted candles, like these one, that one, and this one, and this one, those highlighted candles, they're what we term breaches, okay, of what was expected. And the study can actually tell you if the market is acting rationally, like efficiently, or irrationally, we call inefficiency to the marketplace. And this is just, it's a wonderful time, not only to use the indicator, it's a wonderful time to talk about it. So that you know, when we talk about efficiency or inefficiency, you'll appreciate this. But if you look in the most recent 14 weeks, okay, there's 1, 2, 3, 4. The most recent 14 weeks, 11 out of the last 14 weeks was a breach. It's not just a statistical anomaly, people. Okay, this one's for the record book. I mean, there's so much stuff that's happened in the last 5-6 weeks for the record book, but this one, people are going to be talking about this for literally for decades to come. How wrong the market's actually got it. Anyway, by the way, this week we're actually breaking outside of it. So we're going to give you that indicator. I want to reiterate again exactly when we're going to do that. It's right at the end of the webcast tonight. We will give you a specific link. Follow the link, the SPX expected move indicators there. All right. With that, housekeeping. Listen, tonight we're going to talk about, I'm going to go pretty deep. I'm going to throw a lot of skills at you. Okay. Pay attention. I always say this, like, when you got to pay attention. We've all been quarantined for a long time. Shut the door, turn off Skype, chat, Facebook, please. Okay. Definitely turn off the news. You got to be all newsed out by now. I have my phone on silent mode over here. Kick out the kids. Yeehaw! Grandkids. Dog can stay. The dog can stay. Listen, just real specifically, you took the time to be here. It's important. Focus on being here because I think that I'm going to throw some softballs at you, but I'm also going to throw a lot at you in terms of trading material tonight. And you got to focus a little bit here. So here's a little bit about me. I watched order flow for 15 years. It's a very large portion of why I am here. Okay. And I actually, people are like, well, what do you do? I like doing this stuff. Okay. I'm going to give you a little bit of background on me. So I actually grew up around traders. I had family. I had an uncle that traded, and he started trading in Chicago in the mid 70s. So I kind of grew up around it. I knew what trading was. So my cousins actually traded as well on the floor in Chicago. 3 weeks out of college, and I went to college here in Arizona for 3 years. I finished up in a place in Australia. So those of you that are Aussies, I spent 18 months doing an honors degree over in Australia at James Cook University. 3 weeks out of college, I was invited to work at a firm in Chicago where I resided for approximately 3 years. Then I knew some traders from the OAX pit, and they invited me to a startup brokerage firm. That brokerage firm was called Thinkorswim. I think I was employee number 13 there. Lucky number 13. I went on to actually build the education division of Thinkorswim. That was kind of my thing. I built education for Thinkorswim, a brokerage firm. Nobody knew who Thinkorswim was in 2001. In 2007, I was there when we took it public, and I was there in 2009 when TD Ameritrade bought us. And from 2010 to 2015, I actually ran education for all of TD Ameritrade. I actually ran the education portion of the trader group, and we educated some 7 million. We were responsible, me specifically, responsible for educating, over 7 million clientele. More importantly, though, in the time that I built and ran the education, I had access to all the order flow. We studied flow. People have no idea what flow is. I had access to everything you did. I watched everybody's trades. We studied them. But that doesn't mean, by the way, that's not, I don't want you guys to think that's like nefarious, right? He looked at my account. Of course I did. I looked at everybody's account. We studied them, but on a much more macro scale. We actually used big data. If you guys have ever heard of big data, we'd ask questions, does this strategy work? Does that strategy, work? And what you're going to learn here comes from watching billions and others' mistakes. But listen, I started a trading firm. I grew up around trading, but I got to tell you, watching order flow for 15 years was absolutely unequivocally priceless. Okay. And it's a big portion of what we do here at TheoTrade is we build strategies for retail traders, okay, based on what we learned then. Now, I still do some TV appearances. This is actually in studio at TD Ameritrade. This is TD Ameritrade TV. I go on there almost once a week. I don't do CNBC much anymore. It's not nearly as fun because there's no real traders on CNBC anymore. They just put a monkey in a suit. That monkey happens to be Kevin O'Leary. By the way, he's a great guy. Okay, whatever you might think. Okay, nah, he's a pretty good guy. He's actually a great guy. I've talked to him numerous times. So this is me against Kevin O'Leary. I am the short in Apple. It's that was just one of the more memorable times. Anyway, with that, volatility. Okay, how many people right now that are tuned in right here? And by the way, if you're watching this, later on, you can yell at your screen. I kind of feel like volatility's got people down right now, and it shouldn't. Okay. This is it. Like, I just can't stress that enough. You got to understand, as a trader, this is it, man. This is the decade for traders right now. And this is our time. Okay. Volatility is the opportunity. Volatility is your opportunity. And I just can't stress that enough. So if you've been knocked around a little bit in the marketplace, please calm down. I'm going to show you some stuff, and please take to heart, okay, that we're trying to help each and every one of you. I don't care if I have to sit here for 7 hours a day, on top, okay, of whatever else we're doing to answer emails. This is the opportunity right now. It's coming. Now, everybody asks me also what's possible in the extreme. Okay. And I've put a lot of this in some of the videos that we've done, but this is actually a run that I went on. And if you've never seen this before, this is a screenshot of my account. This is what they call a 5-day net liquidating value. Okay. And it works in reverse. And I know it's confusing to look at, but it should work in reverse. This is actually, by the way, this is a screenshot from the Thinkorswim trading application. So in this, I went on a run, and this was actually the run that was from February. Okay, this is 1 week in February where I actually had $211,929 in the account. By literally the end of the week, we had $248,451.50 in the account. Okay, then I gave you a snapshot of the exact same account. Okay, the exact same account starting precisely a month later. By then, I already had $305,000 in it, on up to 308. Okay, and that's the run that I went on. I'm going to show you some of the strategies that I used to go on that particular run. By the way, I want you guys to understand this account that I'm showing you right here, okay, and the dates and everything. This is an IRA. This is a retirement account. Now, I'm about to show you another account. Why? Okay, why am I going to show you another account? Because I want you to recognize that the accounts that you're looking at right here, this is a month ago. And everybody, well, let me see what you got now. I'm going to show you what I have now. Okay, this is a separate account. It is a separate account. But I insist on showing you everything as recently, literally, as today. Today is April 21st. Okay, that's today. This was Friday, Saturday, Sunday, Monday. This is Tuesday. I closed the trading day on Friday with $699. Okay, that's $699,000. Obviously, Saturday I didn't do anything. You'll see some pricing differentials on Saturday because some stuff settled. Okay, Sunday I didn't do anything. On Monday I made about $5,000 in there. Okay, today is a good day. So we actually jumped from 704 to about 714. Volatility can be a very good thing, and I wanted to get that to you right up front. The types of trades that I used in here, I'm going to show you a lot of the trades that I use, okay? And feel free, don't panic to copy some of these down, right? Some of these trades are, a couple months old, but this is actually, we call a VIX vol spread. I'll actually show you a little bit about this later. This is one, by the way, if you've never seen this before, this is a trade put on January 17th, 2020, the exact time and date. Taken off on February 27th. Okay, I put it on for nothing, which is literally, I didn't pay anything up front. Took it off for a $3.75 credit. And again, what I'm showing you right now is what produced the results, okay, in this particular account. Why did the account jump by $100,000 in an IRA in the midst of a month? And the VIX volatility spread, I had this on a number of times. That one actually did well. This is what we call a risk twist spread. Okay. In this risk twist spread, we, again, in a period of 1 week, put it on for a 53-cent debit and closed it. Apologize. It just drew right over that. We closed it for $3.62 credit. All right. That's every $53 I invested. Okay. I got back $362. It's a 583% return. And before I go any further, again, because I'm going to show you a lot of trades like this tonight, and I'm going to show you trades that I have on now, trades that you can put on. So I'm getting you used to seeing, okay, the format for some of the trades. This trade doesn't have to be $53. It could be $530, okay, to be able to make $3,620. That's fair game, right? Just add zeros to it. I'm just showing you as if I had done one contract. It makes it easier that way. Again, it's 583% return. The next one is an XLU risk twist spread. The risk twist is the big boy, okay? This is period for just over a month. I paid $96 for it. I closed it for $1,272. It's a 1,225% return on that particular trade. I'll also detail this. Every single trade that I will show you here today was done live in front, okay, of TheoTrade clientele. Thousands of people, okay, have the exact same trades on. Here's an IWM. This is what we call an infinity spread, okay? In this particular infinity spread, I opened it on March 23rd, closed at March 26th. You know what? That feels like a really long time ago, but I mean, we're only looking like it's less than a month ago, right? I put this one on for a 20-cent credit, closed it for a $6.48 credit in a period of 3 days. It's one of the largest percentage returns I've ever had inside of a 3-day window. And by the way, I'll throw this in here. Listen, this is what our members are saying. GDX ended up having a fantastic trend day, made 50%. But if I hung in there, I could have tripled it or quadrupled it. I like this one. At work and didn't have time to stay tuned. I actually threw this in there because I was like, where are you working, man? Nobody's working right now. Trader Vic. Wow. TheoTrade. Okay. Just closed my position with $30,000 profit. Greg got out of Lulu Butterfly for 137% return. All of these are just, screenshots. I just grabbed these directly from our chat room. All right. With that, okay, we're going through an incredibly difficult time. Okay. But in all the chaos, you can't, and I want to reiterate this again, you can't forget volatility is a good thing. Okay. Volatility has always been a good thing. And this is different for a lot of people. This is where people get wrong-footed. Volatility is a very good thing, but we have to start somewhere, and that's going to be here. Listen, risk. Your money is on the line. How you handle your risk is going to be directly correlated to your success in the markets, right? You may not think that way, but too much risk, you're going to panic, you're going to close positions continuously at the worst possible time, right? But people are really consistent with their panic. I get to this right up front, and the reason I detail this right up front is because I want you to know, listen, I've looked at literally hundreds of thousands of accounts and studied them. We've seen what works, what doesn't. We've seen what doesn't just gets repeated over and over again. And by the way, this is called puking up your position in here, which I got to reiterate. And that's why I throw this in here first, okay? And we're going to talk about this in a lot of detail in a moment. Your job is to control your risk. From there, some of the profits can actually take care of themselves, all right? I am going to detail a little bit about that risk tonight. Don't get me wrong. We're going to talk about profitability. We got to get risk under control. This is actually from, one of our members saying, it's Todd Summerall, okay? He said, don't know if you remember me, emailed you a few weeks ago and told you my delta was positive. If you guys have never heard of positive delta, that means that this gentleman, okay, is massively long the marketplace. Okay, he was positive delta a couple thousand or more, which basically he was long thousands and thousands of shares of stock. So, okay, says, you told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you, okay, for your information. Before TheoTrade, I had no clue about portfolio delta. A big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. So it's Todd Summerall. Thank you, Todd, because I am using it. By the way, smashing delta, we just told him to close his positions. The reason I'm throwing this in here is because I told you a moment ago, you can email us and you can ask us direct trade related questions. We don't hide, okay? Most of us here at TheoTrade, we're working in the market making business and or we work for a major brokerage firm. We know what we can say and what we can't say. Listen, we'll tell you whether to get in positions, get out of positions. We'll give you all kinds of trade ideas. This is important that you know that, right? Listen, here's what works. Follow a system that has been sourced from hundreds of thousands of people like you. Cut losses and use a repeatable strategy to obtain incremental returns. Successful trading strategies are going to exemplify the following principles. Listen, the reason I throw this in here, here's what works, okay? I don't want to hear what some market maker may have done 20 years ago, whatever. Who cares? I was in that business too. You got to know what works, okay, for retail traders. That's you. Okay, that's, you're at an Ameritrade, you're at an E-Trade, you need to know what do people do that make money, okay, that sit behind a computer screen, whether you're at work, whether you're at home, what are they doing, okay? And that's exactly what we're going to get to. Now, this is what we call principles of building a trade, okay? Follow with me here because then we're going to jump directly and deep into some trading strategy, right? And it's important. It's really important that you guys understand this. The principles of building a trade, this is how we approach everything we do here at TheoTrade. We use number 1, trade logic, number 2, capital allocation, and number 3, directional bias. I'm going to say it again. Trade logic, allocation, bias. Logic, allocation, bias. And you're like, I don't know what this means. Good. Okay? Because we're going to spend just a few slides on it. You have to use trade logic. You have to place strategy and trade logic first. Okay, what does that mean? Listen, the vast majority of people that are involved in markets, what are they infatuated with? They turn on CNBC and a monkey throws a chair around. He's like, you got to get bullish, you got to get bearish. And they hit a couple of buttons and so forth. Okay, everybody's sitting there trying to attempt to predict, what's this stock going to do? What are you going to do? Where's my MACD, my Fibonacci, my Bollinger Band? I can't do it without the Fibonacci. Did the Fibonacci people make you do it? Listen, the right strategy coupled with established entry and exit criteria, okay, you don't necessarily need to be right in picking a direction in a stock or the markets in order to be profitable. You have to have good logic. The point that I'm just going to make with this, okay, there's a lot of really big trading firms, a lot of really successful trading firms out there. Do they just look at a stock and they're like, I'm going to go ahead and I'm going to buy Apple today? I mean, do you really think that a trading firm with billions of dollars, okay, under their management, are they just going to go, let's do it? This ain't mutual funds, people. Okay? This is monkeys picking stocks. If you want to trade in this business, you got to have a logic, and that's what's missing for most people. So logic has to be placed first. I'm going to get deeply into logic here in a moment, but that's why I'm describing it, because logic is critical. The next thing, capital allocation. I'm going to tell you this. How and where you allocate capital, it's got to be a big portion of your trading methodology. Capital allocation actually takes precedence over being right in the markets. Now, people freak out about that. I'm like, wait, what? What did you just say? I'm telling you right now, okay? How much money, see, people don't even know what capital allocation really means. How much money you put into a trade or an investment is more important than you being right, okay? I'll prove it to you really quick. Who here tonight, by the way, when I ask questions, please chat in, okay? Chat in because you're going to need to. And it's going to be important. Who here tonight has ever put a position on stock? Okay, forget about options. Who here has ever put on a stock position, been slightly wrong, panicked, bailed out of the trade, and you were actually like the low tick, and the second that you bailed out of the trade, the market literally turned around. It was like it knew you. It bailed out, you bailed out, it turned around and went the exact opposing direction, and you're like, I could have been somebody. Okay? How many people have ever done that before? Come on, people admitting it's the first step. Right? That's about capital allocation. Okay? Why'd you bail out? I was too big. I used a stop order. All right. So we're just getting somewhere. Now, directional bias. I'm not an anti-chartite. All right. I might be a little anti-charts. I'm not huge into charts because that's, again, the charting, it just drives me nuts. And you go, I got a Fibonacci. Okay? The Fibonacci tell you when the Fed's going to come in here. Listen, where you recognize or think a stock might go, the market doesn't always agree with your sentiments. Listen, being right directionally, it cannot define us as investors or traders. For you might not be right often enough. And it's, the dog I mean, it's important. You got to sustain yourself. It's called duration over direction. How and where you allocate capital can define not only losses, but can be the defining factor in your overall success or failure of the markets. All right. Our war cry is always duration over direction. What that means, you got to be capable. You got to be capable of sustaining trades long enough to be profitable, right? Sustaining trades long enough to see profitability. How do you do that? Well, that's exactly what we're going to get to tonight. And you want to be right, or do you want to be happy? Okay? You know, and I joke about this. My wife does say that crap too. My wife reminds me of that. Listen, when you've been sequestered to the home, I call it imprisoned in a home with a wife and 3 kids for the last, 6 weeks? Okay? You want to be right, or do you want to be happy? Again, I have not applied this to my marriage, but the logic seems to work beautifully in trade. I'll always take this stance. You do not have to be right to make money in this business. And it's a really important concept. Why? Experience, watching order flow for decades. It's taught us invaluable lessons. And I was kind of edging into this earlier, but have you ever been stopped out of a trade, okay, or bailed out of a position only to see the markets turn around shortly thereafter? Now, I already asked that question a moment ago, but you think about it again. Okay, you got stopped out of a trade, you bailed out of a position, the markets turned around shortly thereafter. The point that I'm making with that, it wasn't about your lack of ability. Your MACD, your Fibonacci, your Bollinger Band was probably okay. So what'd you do? You just barfed up the position because you couldn't hold it. You didn't have trade logic, and that's exactly what we're getting into. Core strategy and trade logic. All right, so let's get down to it. Now, I'm going to introduce you to a real-world strategy that you can start getting into tomorrow, okay? And it's extraordinarily risk-averse. Now, when we learn, okay, about risk, we have to talk about risk versus reward. I say, but first, risk versus reward. This, okay, what I'm about to show you right now is one of the more pivotal examples that you're ever going to see in this business. And this is actually an example I have used on and off, okay, for the last, 20 plus years in my career, because it was one of the first things they sat down, okay, and drilled into me. So this is something that was just drilled into me and really resonated with my entire trading career, okay? And that's this. When we first learn about the markets and trading, we're often exposed to ideas like risk versus reward, right? Everybody says that stuff to you. How many people have ever heard that? Risk versus reward. Like the common strategic entrance to the marketplace, got a risk one to be able to make 2. But have you ever looked at the probability of success of the idea? The point that I'm trying to make over here, okay, is did you ever think about risking 1 to be able to make 2? Let me show you. Okay, we're going to take a look at the example. So now we're going deep. We're about to go really deep here into some trading. So we're going to go out and we're going to buy a stock. We're going to buy the stock right at 32. Let's assume right now that we're buying stock. By the way, in every example, I call a stock stock. Okay, stock. And stock that we're buying is trading, okay, at 32. Then we're going to turn around and we're going to set a stop. Never forget, stop is a 4-letter word. We're going to set a stop right at $31, and then we're going to put a target on the top of its head. Target. Okay, and the target is going to be at 34. Does this make sense to everybody? Okay, so what am I doing? It's the quintessential or the prototypical risk 1 to be able to make 2 setup. Yeah, everybody got it? Okay. Anybody? So in looking at this, all right, so if we go down $1, we lose $1. But if we go up $2, I make $2. Good. Anybody ever tried it before? Anybody? Come on, people. These are not rhetorical questions. You got to jump in here at some point tonight. Okay? I don't know. Let me ask you something. How's it working? How's it working for you? How's it working for you? Okay? Because the thing that people don't realize is trading is about probabilities. Probabilities in your trading. So let me ask the question again. Okay? Well, in a different format. So you got this stock and you bought it. And you bought it right at, wrong color. Okay? And you bought that stock right at 30. Oh, I'm going to get this right. Okay? You bought that it's mocking me. You bought the stock right at 31. Okay? You got that target up here, of 34. And the stop order down below. Okay, sorry, I'm butchering it. It's my pen. I tell you. Okay, the stop order is at 31. You bought the stock, okay, at 32, and the target is set right at 34, right? have you looked at this, though, objectively? Now, step back, and I want you to think about it for a second. Markets have normal volatility fluctuations. You forget about right now. Like right now, we're anything but normal right now, right? But markets have normal volatility fluctuations. It is markets fluctuate higher or lower and higher or lower day-to-day basis, okay? What's more likely to occur? Go down a buck or up two? You tell me. What's more likely to occur? Going down $1, okay, or up two? You guys tell me. So what's more likely to occur? All right. The stock fades by $1 or the stock rallies by $2. And that's one. And I'll even ask you another question. Okay. Can you assign probabilities to this? Like what's the probability? What's the probability of going down $1? Okay. What's the probability of going down $1 versus going up 2? And that's exactly what you have to be able to answer because that's what logic is. Now, options are probabilities. Now, time out for a second. I'm not here, okay, to drill anybody and to force them to trade options. And I'm not here to do it, okay? Either you're going to trade them or you're not. And I'm fine with that. I've come to the conclusion, okay, you've made up your mind. But I am going to tell you this. I don't care whether you trade options or whether you do not trade options. But I do care this. You cannot trade in this market now without looking at options. You can't do it because options, okay, what they're doing is they're giving you the probability of stocks hitting particular levels. And without using the options marketplace, you're blind. Okay? Listen, you may have never looked at an option. Maybe you never even traded an option. I said the O word. But options can help us in determining the viability and practicality of a trading strategy. That's the one thing that's like wild to people. I'm not here to tell you like you got to do this, you got to do that. But don't you want to know the practicality and viability of a strategy? Like and how can it do that? You have to be able to look at a strategy objectively, and the options are going to help you do this. So what we're going to do, okay, is we're going to take a look at the aforementioned strategy right here. I mean, we're going to say like, all right, we're going to find a stock that's trading right at $32. We're going to look, okay, we're going to look at the probability of being stopped out at 31 or hitting the target of 34. And you're going to find out what those probabilities happen to be. Now, before I go to the next page, don't freak out on me. I'm going to take you through it, okay? It's a little bit deep. Ready? All right, here we are. So what you're looking at right now is a screenshot. This is a screenshot of the XLE. If you don't know the XLE, it is the energy sector ETF. Why did I select the XLE today? I don't know. Oil's been in the news a little bit. The XLE, some of the primary components are stocks like ExxonMobil, Chevron, Schlumberger, okay? All of the big boys of energy are inside the XLE. And I took a screenshot today, and the XLE was perfectly at 32. Like I waited for that because I wanted to base my example on it, right? So if you went out and you bought the stock right at 32, okay, because it's right at 32 on the button. I live for that stuff. We're going to use the options chain to determine what's called the probability, and this is something not a lot of people are familiar with, probability of touching, okay, and the probability of touching. Now, the probability of touching, it's just an information layout, okay, on this platform. This platform that I'm on right here is called Thinkorswim, okay? If you don't have, by the way, Thinkorswim belongs to TD Ameritrade. If you don't have it, E-Trade. Does E-Trade have probability of touching? Yes, they do. Okay, oh, they do. It's called anytime probability on E-Trade. Okay, does this brokerage firm? All of the brokerage firms have it now. Why? Because it's essential. It only took these brokerage firms 20 years to figure it out. It's essential. Here, what you're looking at with the probability of touching. The probability of touching 31. Remember our strategy and the way we set it up. Okay, because we had this stock and the stock was trading. Okay, the stock was trading right at what? 32. We set the stop at 31 and we set that target at 34. Okay, so what's the probability of getting stopped out? Now again, I'm not trading an option. I'm not. I swear to you, I'm not trading an option. I'm just looking at it. The probability of getting stopped out is 74%. Because what this is the 31 strike put. What it says, okay, what's the probability of touching? Okay, what's the probability of touching? 31. And this one is just for the next 3 days. I just put it for the next 3 days because I wanted to show you there's almost a 75% probability, okay, almost a 75% probability of touching the 31. How's that grab you? You're like, that sounds not so good. Yeah, sign me up for that one. I have a 74% chance of getting stopped out. Okay, why doesn't anybody else talk about this? By the way, conversely, what's the chances of getting to 34? 45%. Why am I showing this to you? Because, okay, if you don't understand the very simplistic nature of probability of touching, if you don't understand risk reward revealed, okay, we can't go any further. We have to get this point home. The probability, okay, in the aforementioned XLE example, this is the energy sector, the probability of hitting the stop order of 31 was 74%. The probability of hitting the target price of 34 was 45%. The risk 1 to make 2 scenario is just a low probability disaster. It's an absolute disaster. And people end up, they do this, and they do it, and they do it, and they do it, and they do it, because that's what they learned. And they don't realize all they're basically doing, it's a slow bleed. Because there's a 45% chance of making money. It doesn't say that you're not going to make money. It just says that you're going to make the $2 so infrequently that it's going to bleed you out. Are we okay so far? Are we okay with that example? Do you guys got it? All right, because that's important to me here. As I hit upon this example, you're like, why are you showing this to me? Because you got to overcome this. You can't go out. And when I start talking about earlier, like trade logic, and people are like, why is he bringing up trade logic? Because you have to position your portfolio with the right trade logic. And if you don't, we're dead in the water. Okay, you got to get down. Let's get dirty. How do you position yourself most effectively? Okay, without exposing yourself to drastic risks and or a low probability. Again, you can't be here. And if you're doing this risk 1 to bank 2, risk 1 to bank 2, and somebody says that kind of stuff to you, you got to run. You have to run. It ain't about a MACD. It ain't about a Bollinger Band. Okay, if you don't have good trade logic, you're in trouble. All right, trade logic. What's going to be our trade logic? Well, I'm going to tell you right now. Number 1, overcomes a high probability being stopped out. We have to hit upon that. Number 2, I want to define your risk. Okay, so what does a stop do? A stop kind of defines your risk. Well, I don't want to use a stop. Forget that garbage. I want to define your risk. Number 3, you need a high probability of success. I'm going to get to that. Number 4, limits capital exposure. You're like, whoa. Isn't limiting capital exposure and defining your risk the same thing? Absolutely not. Capital exposure, okay, has to do with, well, first of all, these two are kind of the same. You don't have to buy or sell the stock. This is where I am going to say, I'm going to get you to the O word. We are going to talk a little bit about options right now because we're going to use them to mitigate the risk. Okay, we're going to use everything we're going to talk about as risk mitigation tactic. You're not going to have to buy and sell the stock. You shouldn't have to buy and sell the stock, especially in the marketplace that we're in right now. Okay, we have to hit upon these 5 notions. Listen, enter the in-out spread. In-out spreads, what are they? Well, they're designed to limit exposure. But at the same time as you're limiting exposure, you got to maximize potential. But at the same time as you're maximizing potential, you only have to have minimal movement in the underlying. Okay, you got to hit upon a lot of things. Yes, in-out spreads are option trades. Okay, and for those of you that are brand new, there's always one in the crowd. They're like, I don't want to be bothered with options. That might be, but I'm telling you right now, you stay tuned. You stay tuned because I want you to see what you can do with options. Okay, to mitigate, to control those risks. And option spreads, they're going to allow us to limit risks without the use of stop orders while providing considerable upside potential. And you got to think about that. With that, let's actually describe it. Let's start to really get into the context of the in-out spread. First of all, here we are right there. Now, we're going to go out there and I'm just going to use a simulated stock position. Just bear with me for the first example, okay? And please, if you understand a little bit about options, hang with me for a minute because I'm going to tell you, you're going to have some fun here in a second because we're going to really ramp this up. So we're going to use this simulated stock position. We're going to call it, as I call every single simulated stock position, stock. And stock is trading right at 100. Now, do I own the stock? No. Do I want to own the stock? No. Am I thinking about buying the stock? No. All I'm going to do is I'm going to go out there and I'm going to trade options. And I'm going to do this in the most simplistic fashion I possibly can. First, we're going to talk about what is called a 90, okay, 9 call. A 99 call. Now, a 99 call. Now, we're going to associate this with a price right now. When I say a 99 call, and that 99 call is going to be trading for, in this case, let's make the 99 call cost $3. It's going to cost $3. So what's a 99 call? Okay, what's a 99 call? And we're also going to put it down here. We have this 99 call, and it's trading for minus $3. It's going to cost us $3. What's a 99 call? Well, 99 call gives us the right to buy the stock at 99. Let me ask you something. Do you want to buy the stock? No. Then why are you buying the call? Because I want the right to buy the stock. Okay. Why do I have to pay $3 for it? Because you're special. Because options are going to cost something. And in this particular case, this option, let's say that this option is good, okay, for 1 month of time. So a 99 call. You're going to go out and you're going to buy the 99 call because it gives you the right to buy the stock at 99. Now, if you have the right to buy the stock at 99, can you buy the stock at 99? Yes, you can. Okay. So what happens if you bought the 99 call and the stock went to 110? What's a 99 call worth with the stock trading at 110? Well, if you have the right to buy the stock at 99 and the rest of the world has to pay 110, if you buy the stock at 99 and sold the stock at 110, you would get what? $11 minus the $3 you paid for the little monkey, right? So what I want you to know about a 99 call right now is it gives you the right to buy the stock at 99, but you have no intention of buying the stock at 99. You're just going to buy the 99 call with the intention of selling the 99 call at a later time. Are we okay? Because this is where, this is where the caffeine is necessary. Now, at the same time as buying a 99 call, you're buying a 99 call, which gives you rights, and you paid $3 for those rights. Rights to do what? To buy the stock at 99. At the same time, you're simultaneously, okay, and this one over here, and I want to make this clear, we're buying it, okay? We're buying the 99 call. So let's put that down here as well, just so that we clarify, okay? We're going to buy that 99 call. At the exact same time, we're going to sell, okay? What are we going to sell? In this case, we're going to sell a 101 call, and we're going to sell it, in this case, for $2. So let's put that down below, okay? We're going to sell, in this case, a 101 call, and we're going to sell it for $2. All right, and we're going to do this all at the exact same time. So the trade is going to cost us a $1 debit. Now, everybody's like, whoa, 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 whoa. Slow down there, cowboy. I get it. You bought the 99 call. The 99 call gives you the right to buy the stock at 99. But then you turn around and you sold a 101 call at the exact same time? Yes. And immediately people go, how could you sell a call that you never owned? Nobody had to own it. Options are rights. Options are obligations. So if I want the right to buy the stock at 99, I can do that by buying the 99 call. I have the right to buy the stock at 99. In this particular case, though, I opened the position by selling the 101 call. What does that do? First of all, anytime you sell an option, you're selling yourself into an obligation. Okay? It's like getting married. So you sell yourself into an obligation. What's my obligation? To give somebody my stock at 101. But because I sold myself into an obligation, I get to collect $2. $2. Now I get to collect $2. Why? Because I have to give somebody my stock at 101. You go, excuse me, Don? You don't own any stock. I know I don't own any stock, but I have the right to buy the stock at 99. So if I have the right to buy the stock at 99, but somebody has the right to take stock from me at 101, what's the most I can make in a $2 wide spread? The most I can make in a $2 wide spread. Well, I could buy the stock at 99, give somebody else the stock at 101. The most I can make is $2. So here's the stock at 100. If the stock goes up here, what do I make? Okay, I make $2, of which I paid $1 up front. I paid $1 up front for that thing. Okay, so if I paid $1 up front, what did I actually make on the trade? Here's where we're going to get fun. Is everybody okay? Are we okay so far? Because this is where things get kind of crazy, right? Okay, breathe, people. Breathe if you've never had options anymore. What I'm doing in this strategy, and I like to detail this because this one really kind of freaks people out. This is a bullish strategy. I want the stock to go up. I'm buying a 99 call, but then I'm giving somebody the right to take my stock from me at 101. But if the stock goes up to like 110, can I make money? Yeah, but I don't make that much money. What I'm doing in this strategy right here, ready? I'm going to put it right here. Okay. I am literally risking one, okay, to make one. This is a risk one to be able to make one. And you go, I don't want to do that. Why would I want to risk a buck to be able to make a buck? Think about that. I mean, most people, they don't get it. They don't get it. They don't see it. You're about to. Risk a buck to make a buck. Risk a buck to make a buck. Risk a buck to make a buck. Laugh about it all day long. Why would you want to risk a buck to be able to make a buck? You tell me before I give you the answer. Okay? Before I show you in detail, why might you want to risk a buck to be able to make a buck? Does anybody know? Holy smoke! Somebody got it off the. Somebody got it right off the bat. So some days you're going to make a buck. Some days you're going to lose a buck. Okay. What's the difference? It's about probability. It's about probability. Okay. It's about probability. It's not about the return. It's not about doubling your money. It's about probability. How is it about probability? I'm going to show you exactly how this works and why it works. Okay. And this is what I talk about with trade logic. And that's why I started with the risk a buck to be able to make two. Because risk $1 to be able to make two don't work. Because there's such a high probability of getting stopped out earlier, remember? Right? So you had a 74% chance of getting stopped out earlier. Clear your mind for a second. This is why this works. Here is Mr. Stock. Okay. Mr. Stock is trading at $100. What can this stock do over the course of the next month? Now, I know this slide's getting a little crazy over here, but you went out and paid $1 for this thing. And you paid $1 for something that could be worth $1. And you go, why would you want to do this strategy? Because I'm going to tell you what the stock is going to do. This is a bullish strategy. Okay. I want this stock to go up all day long. Make it go up. I looked at my MACD. I looked at my Fibonacci, the Bollinger Band people. I even used the Elliott Wave. And everything said it was going to go up. But you put the position on and it doesn't go up. This stock goes from 100 and immediately goes down to 90 bucks. Now what do you do? Literally, like almost overnight. The stock goes from 100. It's now down trading at 90. You're like, oh, humanity. Okay. Now, by the way, when the stock goes down to 90, you're like, now you're talking, Don. This is like the crap that I pick every single day. By the way, how do you get a stock to go down? You buy it. The stock immediately goes down to $90. So then what do? What do I do? Okay. What do you mean? What do I do? I don't have to do anything. I only have $1 at risk. And I still have 3 or 4 weeks left. You know what happens? Okay. Sometime in the next couple of weeks, stock comes up, comes above the 101. Boom. I'm out. I make my buck. That's it. You have to understand. You want success? Make yourself impervious to the downside. You want success? Let the stock move against you, and then the stock can actually rebound at any time. This business is not about being right. Yes, I want to be right in this strategy. I need the stock at some point in the next month to go up, but think about how high that probability happens to be. The probability that anytime in the next month, or in this case, I could do 2 months, or I could even do 3 months, okay? In the next 2 to 3 months, that this stock goes up any time in that period. By the way, this trade doesn't have to be done in a bullish scenario. It could be done in a bearish scenario. Does this make sense to you? Okay? Because the most important thing is that we drive home what those options are and that the strategy, okay, makes you very much impervious to the directional bias. In-out spreads, energy sector example. I thought this was, by the way, I literally waited again for the energy sector to hit 32 to do this example because I like to make it nice and clean. So there's been an oil spill. Okay, if you missed oil in the last 48 hours, it's been entertaining. Let's continue our energy sector example. But this time, we're going to use in-out spreads. Okay, forget stock, forget stop orders. Rather than buying the stock at 32, we're going to use a spread trade to limit risks and provide a high probability without the use of stops. Okay, this is real. All right, this is, when I say this is as real as it gets. The XLE is trading at 32 bucks. Now, do I own the XLE? No, I don't own the XLE. Instead, I went out, okay, the XLE is trading at 32. I buy a 31 call. It's trading for $3.30 debit. Okay. Then I turn around and sold a 33 call. Remember, if you buy the 31 call, it gives you the right to buy the stock at 31. If I turn around then and sell the 33 call, it gives somebody the right to take my stock from me at 33. So if I have the right to buy the stock at 31 and somebody can take my stock from me at 33, what's the most I can make? I can make $2, but I paid $1 up front. So what am I risking? I'm risking $1 to be able to what? Make $1. Risk a buck to be able to make a buck. Risk a buck to make a buck. Why is that a good thing? In this particular case, let's see what happens. Okay, so the XLE, this has been one of the most volatile sectors out there. It's energy. I mean, what happened in oil over the last 48 hours is one of the most hideous things to ever happen in any market in the history of markets. Okay, energy sector, let's say it sells off. All of a sudden, the XLE is at 32. You're like, oh, it comes down to 30. Turns around, rebounds. At some point, hits 35. You're out. You're out of the contest. You're profitable. The probability. Okay, and here's the key phrase. You ready for this? Okay, it doesn't necessarily matter the initial movement of the stock. It doesn't necessarily matter that stock, okay, that stock initially heads down. What this trade has going for it, it's a risk one, okay, to be able to make one. But the probability of profitability, okay, is substantially higher. And I'm going to say that again. It's called probability of profitability. And in this case, it's substantially higher. Risk one to be able to make one. Risk one to be able to make one. But you have to set the trade up correctly. That's what the in-out spread affords us the ability to do. That's why I don't use a stop order. Why do you need a stop order? Somebody always asks me, like, can this thing lose money? Of course it can lose money. It's going to lose $1. Let's say we have an absolute outright crash in the XLE. You know why I did this strategy today? Because this one's bullish. Because the crash maybe has already happened. Because maybe I want to get bullish in the XLE. Maybe I don't want to go out and buy an oil contract and risk my entire life. By the way, if you don't know this, TD Ameritrade, along with most major brokerage firms, they shut down oil trading today. Shut it down. You can't trade oil anymore. Well, at least right now, on most of the platforms. You can't do it. Okay? So now you're forced to go to the XLE. You have to. Why do they do that? Because the risk was too big. They want you to define your risk. They want you to learn stuff like this. How do I know? Because I ran their education division for 15 years. You have got to learn to use spreads, right? Listen, this is why you want to use in-out spreads. As I detailed earlier, okay, number one, overcomes the high probability being stopped out. That's because he's not using a stop. Number two, defines your risk, okay, and limits that capital exposure. You know exactly what your risk is. In this case, it was $1. You know, you could do the aforementioned strategy with $100 at risk. You never need to buy or sell the stock and provides a really high probability of success. You can initially be wrong in terms of price movement and still come out ahead. And I can't stress, in the midst of volatility, you think you need this in your life? You need this in your life more now than ever before. You can't get caught in this volatility mess without this. This is it. When I say this is it, this is the real strategy. This is actually laid out on a trading application for your consumption. This, people, is the XLE. Okay, this is trading right at 32. This is actually everything on my left side of my screen is my calls. I am buying the 31 call. I am selling the 33 call. It is done for a $1 debit. You can look at it tomorrow. Now, granted, tomorrow morning, maybe the prices have moved around a little bit. The maximum risk is a $1 debit. Okay. The trade that I selected is 31 days out, but I want you to know you could actually do this trade for 31 days. You could do it for 2 months. You could do it for 3 months. And here's the crazy thing. It won't cost you any more the further you go out in time. Okay. Do you get it? Okay. Do you get it? Do you see the power behind it? And again, this one says 31 days out, but why not do 3 months? Because more time give you more time to be right, more time to be wrong, more time to laugh, more time to cry. Okay. You got to think about that. Here, 31 days, not necessarily it, but this is the XLE. And the reason I selected the energy sector today, you know, normally I do some stock, like it's like a Twitter, it's a Starbucks, whatever. But today I really wanted to select the XLE because if you look at the world of traders, okay, you and I, we're all quarantined at home. We're sitting in front of our screens. We're trading. Everybody today that knows this business looked at oil. Every one of you looked at oil. Some of you may have actually embarked upon it. How many of you can say that you actually traded in the energy sector and didn't have more than $100 at risk? Now, you don't have to do $100. If you want, you could have $1,000 in this trade. You could have $10,000 in this trade. That's up to you. Okay, but anybody that went and traded an oil contract today had their life savings on the line. That's not a joke. I don't care whether you had a $100,000 account. You could have wiped a $100,000 account with one oil contract. It was that crazy. People don't realize yesterday, oil started at $21 a barrel yesterday. It went to negative 40. If you had one contract, you would have actually lost $62,000 on one contract of oil. Here, you're limited to $100 of risk. Okay? Listen, in-out spreads, okay, this is the way to go. It can give you the power to trade massive stocks, massive index products. Okay? When I say a massive stock or an index product, pennies at risk. Literally pennies at risk. Want to see? Now we come to Amazon. Is that massive enough for you? I just wanted to make a quick point with this. Amazon today, and this is, by the way, this is today, was trading, okay, when I took the screenshot, $2,302.37. So it's $2,300 stock, right? Here is an in-out spread, but this one's bearish. I actually did this one bearish. Why? Because it's Amazon. Okay, the love-hate relationship. Everybody love-hate relationship with Amazon. You'll have to love to hate on them a little bit. This is a $5 wide spread, okay, for $2.50 at risk. Now, if it's a $5 wide spread, what's the most you can make at a $5 wide spread? You can't make more than $5, but you only have $2.50 at risk. It's still a risk a buck to be able to make a buck, risk a buck to make a buck. But people think that they can't trade something like Amazon. You have $250 at risk. You know what the best part of this one is? I did this one 31 days out just to make a point. You would be carrying this through earnings. Ooh, woo, that's going to be wild child stuff. You would carry this through earnings. You could come up into Tesla. Okay, you could do Amazon. You could do the SPX. I don't care. As long as it's a liquid product, you have got to learn how to use in-out spreads in this volatility. Because in the volatility, you don't have to be right day one. You don't have to be right day two. The greatest thing about volatility, okay, is what does volatility give you? All right, volatility, like one day we're up huge, the next day we're down huge, the one day up. Okay, eventually we cross through these strikes, you make your 250, you run for the hills, you're like, I'm out, baby, I'm out of the contest. You make your money, you make your percentages, you run for the hills, you do it again. That's what you got to learn with high probability in-out spreads. Here's a couple live trade examples from me. Now, I'm actually going to give you trade after trade after trade after trade. These are trades I've done, some trades I'm actually putting on. You're going to laugh, you're going to cry. Every trade I'm about to show you right now, okay? Every trade I'm about to show you, okay? I traded live in front of TheoTrade clientele. Every trade was executed, and you have the exact time, date, everything of the execution, okay? I'm actually going to give you the history over the last 2.5 months, okay, in-out spreads. This first spread was actually done in the QQQ, okay? That's the NASDAQ. So in the NASDAQ, I went out there and I bought an in-out spread. This is a put spread, okay? It's a $2 wide put spread, just like I showed you a moment ago. I put it on for what? It's every $80 invested, okay? I got back 139. It's a 74% return, 74% return in about a 3-week period. Now, I don't just go out and put on like one trade, okay? Couple here, couple there, but I want you to see the methodology of this. That, and again, you're going to see some patterns in what I'm showing you. And this doesn't necessarily need to be $80, but I want you to know if you have a $2,000 account, this is applicable to you, right? But maybe you have a $200,000 account. You don't want to do an $80 trade, okay? So bump it up, do an $800 trade. An $800 trade can return what? Okay, instead of $139, $1,390. And of course, you can add another zero from there, right? Be comfortable. All I'm showing you here is the structure of the trade, the exact time I entered it, the exact time I exited it. Okay, that's the first trade. Next trade up, JP Morgan. JP Morgan, very similar time frame. JP Morgan is also a bearish trade. Every $81 I invested, I got back $159. This is a 96% return. Yeah, I'm still in February, okay? We're going to make it a little bit more apparent now, you know, and as I go from JP Morgan, I'm going to up the time frame. This is actually Amazon, and I wanted to show you an Amazon trade because I just talked about it a moment ago. So in Amazon, this trade was actually put on March 20th and taken off on March 20th. I put it on a half an hour after the cash open, okay? The market opens here Pacific time at 6:30. I put this on at 7:02. I exited it 13 minutes before the close. Okay. Every $225 I invested, I got back $377. It's a 36% return, but it's a 36% return literally in a few hours. That was not my intention. My intention, okay, was to put an in-out spread on, hold it, and having a 36% return by day's end, it fulfilled, okay, the criteria. And we're going to talk to you about that. It fulfilled all of the criteria. Now, to continue on with that one, next we have Costco, okay? I like Costco, okay? So here's a Costco trade. This March 17th, okay, St. Patty's Day, exited March 24th. Every $211 I invested, I got back $335, a 59% return. Now again, don't forget, this doesn't have to be $211. It could be $2,110. It could be $21,100, and change. Like I can go on and on with this. But this one's a 59% return for, again, a period of just about a week. From Costco, I wanted to show you another Costco trade. I use the same underlyings again and again and again. Like I use the exact same underlying. This one I opened up on March 11th, closed this one March 24th. Every $110 I invested, I got back $177. It's a 61% return. Okay. There's nothing cute about this. This is a 250 wide spread. That's it. Okay. Nothing cute about it. Next, this is a favorite one of mine. Microsoft. Okay. So in Microsoft, this is a one-day trade. This is a one-day trade. I opened it on March 19th, closed it on March 20th. Okay, every $211 I invested, I got back $301. It's 43% return, right? What did I do in here? It's the exact same thing. The structure's the same, okay? It's, again, I go through the exact same logic. It's what we term criteria. And what criteria is? It's the recipe. It's the recipe of how to actually structure a trade, okay? In particular, how to structure the trade in Microsoft. And as I said, each and every trade that I do here at TheoTrade, this trade included, was done in front of all TheoTrade clientele. Here, this is what our members are saying. This is actually, by the way, I want you to look at the, if you look at the time and dates of the trade, some of the trades, out of Microsoft, 175% profit, $1.93, that was easy. Out of one of the Microsoft contracts for 100%, gonna let the other side ride. Microsoft put it on for 93 cents, sold it at $1.64, just closed out of Microsoft. Hi, I showed Microsoft this morning, got 200% profits. Again, it varied. Got out of the Lululemon butterfly over here. Out of Microsoft for 274. There's varying prices. Why? Because there's literally in TheoTrade thousands of clientele. Kulu out of Microsoft for 270. In at 95 cents. This is another one. This is Boeing. Boeing in out spread. So now we're coming to much more current trades. I don't want to show you stuff that's old. I like to show stuff that's, when I say recent, I know it felt like, a month ago, but it's not. It's like, 19 days ago. This is a trade I got in on March 25th, and I actually exited on April 2nd. On Boeing, every $238 I invested, I got back $362. It's a 52% return on a $5 wide spread. And in terms of Boeing, here's one where, again, a ton of people got involved in this one. Closed Boeing at 357. And again, if you take a look at this, this is April 2nd. This is April 2nd. Closed Boeing, 357 profit. Mary Ellen filled Boeing. The 140, 145, 363 credit, 55% return, 357. What they're talking about in this case is exactly what they got out of it. I got out of it at 362. And there's some people in here, look. Mariano got out of it at 364. They even bettered me. Again, it's all clientele doing the exact same trades and following along in the footsteps over here. All right, moving along over here. Next one is the Visa spread. A Visa spread, as I said, I like to get a little bit more current. This one I actually put on March 30th, exited on April 1st. Every $107 I invested, I got back 152. It's a 42% return. You guys are probably picking up on a pattern right now of some of the returns over here. This is an Intel spread. On Intel, put it on, April 7th, closed it April 8th. Every $86 I invested, I got back 111, 29% return. 29% return though, and what? I put it on at 659 one day, close it at 653 the next day. It's pretty quick for that type of return. Moving on from there, All right, are we okay? Because you're seeing the exact same trades again and again and again and again. The next, the XLE. In terms of the XLE, okay, what are we doing here? Well, I wanted to show you this is a trade that we just kind of talked about, but here's a real trade, okay? I've been trading in the XLE extensively. I mean, that was our example today. Here's one, okay, where I opened it on April 14th, closed it again on April 15th, opened it for $87. I invested. I got back 120. It's a 38% return. Okay. Moving along from there. All right. Oh, by the way, what our members are saying on this one, Jeff Parody. Okay. This XLE was my first ever option trade in out. Okay. And it filled. I'm officially 100% win rate. I love that one. His first trade. He made money on his very first trade. It's a miracle. Okay. So Marshall Gross, Don K, and TheoTrade team. All right. Russell said, nice trade over here. Listen, I closed my XLE in-out spread for a 30% gain. In at 87, out at $1.15. Okay. Milu said, I closed at $1.15, 14 first lot. They're talking about this particular trade. All right. I got in at 87 cents, closed it at $1.20. Okay. This guy got in 87 cents, $1.15. A lot of different people trading in here. This is another QQQ spread. And as I said, I like to do things that are current here. The QQQ spread, you'll recognize some of the dates on the screen because it's today. April 17th, out April 21st. Okay. Every $80 I invested, I got back 108. It's a 35% return in here. Okay. And again, it ain't bad for what? Less than a 3-day window. This is over a weekend as well. This is the NASDAQ. It's the NASDAQ, 100. Okay, listen, okay, out of my second QQQ trade for a 30% gain. Paul over here, I made good money in the QQQ trade. Thanks, Don. Greg Pass, 30% in QQQ in-out spread. Mark S, closed QQQ for $1.09. Thank you. YRB, tried really hard to get $1.06, but the market forced me to get $1.08. Lots of laughter. He's actually talking about he got out at $1.08 after expecting $1.06. Okay. There's a lot of trades. There's a lot of trades that I just took you through because I wanted to show you trade after trade after trade. And there's absolutely winning trades and there's absolutely losing trades. But you have to understand it's about probability of profitability in here. I don't tell you every single trade makes money. Okay. But you get to hold the trades. And right now, I just cannot stress right now, this is volatility. This is the time, okay, to trade. This is how you want to go in. You want to be defying risk, okay? And listen, I mean, what better time? You got to learn something here. I hope that's okay with you, but you're going to learn a skill set that's going to last a lifetime. But you have the time right now. When are you ever going to have time like this again, okay? If you're still working, you can do this part-time. If you're quarantined, okay, this is how to come out stronger, better financial shape, okay? Very least, you got to learn to mitigate those risks. All right. Listen, Jamie G said plus 55% to start working out of my from home. JHS, good morning, all. Another day of working from home. Thank goodness for TheoTrade to keep me sane. This stuff matters to us. Okay, it absolutely matters to us. You're not going to have time like this again. And some of you maybe have another 10 days at home, but most of us are probably going to have another 2 months at home. And if you don't have a lot of time thereafter, it's all right. The trades that we showed today, okay, and that were displayed, all of them were displayed live at TheoTrade, okay? The trade results that we're showing, they're perfect for part-timers. The in-out spread, it's hands-off. It uses good till canceled orders. That's why a lot of us were actually filling at the exact same price because we're using what's termed a good till canceled order. We actually set the trade up and say, when we make X amount, okay, execute the order. You get a fraction of your time. It's enough to see some results over here. I don't want you to feel like you're going to be glued to a screen. Now, a couple of characteristics of in-out spreads and the attributes of this trade, the high probability in-out spreads, I think are undeniable. All right. What do you have to do? What don't you have to do? Well, in this trade, first of all, okay, you never have to buy or sell the stock. You don't have to buy or sell the stock. You could define your risk. The risk is limited to precisely your comfort level. Down below over here, this is the XLE spread that I was showing you a little bit earlier. It's $1. It doesn't have to be $1 of risk. Okay, you could have $100 of risk or $200 of risk or $300 of risk. Tailor it to you. Okay, there's no stops. You vary time frames and not pay more. You could do this trade for a month. You could do it for 2 months. You could do it for 3 months. It will not cost you more. The probability of profitability is high. It's a perfect spread, though, to reduce risk of a portfolio. How? I don't know. You don't have to go out and trade Amazon. You don't have to go out there and trade oil. Okay, it's an excellent tool as well if you're going to try to build a smaller account. Or some of you are going to tell me, hey, I've been knocked around a lot in the volatility. That's okay. That's par for the course, right? Okay. Just please, you got to learn to build this trade and do not let options intimidate you. The spread below is being done for a $1 debit. But the spread, okay, this thing's a power saw. You know, one of the analogies that I've used for years, options. Options can be the quickest, the fastest, the safest, the easiest, okay, way to get where you want to go in the markets. They really are. But if you don't know how to use them, you're going to lop off a couple of fingers. And you want to go out and build a house, of course you're going to use a power saw. But if you don't know how to use the power saw, you cut off a couple of fingers. And people have always like, oh, what happens if I get exercised in here and in a sign? We cover that. You got to learn to use these things correctly. And you got to realize you can do in-out spreads. Even if you don't know options or have limited options experience, okay? Don't let the options portion again intimidate you. You need the strategies for the foreseeable market future. You know, I emphasize that you need this, okay? I'm not joking. What do you think is going to happen a couple of months from now? You think this volatility is going to die down? Do you think the Fed and the central bankers around the world just threw, by the way, as of today, we're up to $6.8 trillion around the world of stimulus, okay? What do you think this marketplace is going to look like? You want to go out there? You want to buy some Apple? I'm going to buy some Apple pretty soon because it's going to be you're going to get your head taken off. Okay? Use the in-out spreads. We can show you how. We can show you when to place in-out spreads. It's a matter of a couple of hours. What we do here at TheoTrade, it's not about the in-out spread. It's about detailed recipes for the in-out spread. Okay? Listen, you know what a cake is, right? Okay, bake a cake. And you go, oh, okay. You have a recipe. And you know what? Some people can bake a cake without a recipe. Maybe they can, but they've probably done it 20 or 30 times before they could bake a cake without a recipe. Okay, we're going to give you a recipe. And we're going to give you a recipe to be able to build an in-out spread. Okay, you bake a cake, you use a recipe. Right? You fly a plane, you use a checklist. Why do you trade without a recipe? Okay, listen, this is what you need to know to successfully enter and exit in-out spreads. What makes a viable in-out spread candidate? This is the stuff, this is the meat that you need, right? What makes a viable in-out spread candidate? Why did I use Amazon? Why did I use XLE? Can I use Starbucks? Maybe I should use the spiders, okay? What do you use, okay? I want to trade Twitter. You got to make that right. How do I know what candidate to select? I'll tell you exactly how. You're going to know the volatility. What volatility should I seek out? Walmart, maybe Costco? Huh? What volatility do you need to seek out? Should the volatility be this? Should it be that? What expiration do I select? Should I do the trade for a month, maybe 2 weeks, maybe 3 weeks? Maybe I could do the trade for 6 months, because with 6 months, it's going to need more time. More time to be right, more time to be wrong. What expiration? You have to pinpoint accuracy on this. What about earnings? Okay. What should be the delta of the option I buy? You're like, I don't even know what delta is. That's okay. We tell you what delta is. What should be the options? Okay. Do I sell against this position? Right? In the spread, you buy one option, you sell another option. You have to know exactly what option to buy, what option to sell. You have to know the expiration. You have to know the volatility. You have to know, again, all of it. Okay. On top of, how do I even build the trade? Some of you could probably figure out how to build the trade, but you might not even know what the right amount of risk for you is. If you have a $2,000 account or a $10,000 account, okay, maybe you don't have the day trading margin rule. We show you about that, okay? We tell you about the right amount of risk for you, whether you have a $250,000 account, a $2,000 account. Every trade I've showed today was done inside of my retirement account. Literally, every trade I showed today was done inside of my retirement account. So we tell you the risk. $2,000, $250,000, $2 million account, you can do in-out spreads. Let me show you what we do here specifically at TheoTrade. TheoTrade creates recipes in trading. And I was just talking about it a moment ago. It's a recipe. It's a checklist. Okay. What you're going to find out about trading, if you do this long enough, you will see this. It's about answering the what ifs. Okay? Think about some of the positions you guys have been in. Okay? What do I mean, what ifs? What might be a good stock or ETF candidate for in-out spread? What's the correct expiration cycle, to build my in-out spread? Okay? How much capital do I commit to these in-out spreads? The strike price options do I buy and sell, and how many? And growing a small account, what should my allocation be? TheoTrade has your answers. We build recipes, definitive criteria. We build checklists. They're like flow charts. Okay? Every strategy and each unique variable. When I say a variable, what can happen to you? Stock can go up, stock can go down, right? Stock can stay flat, expiration is coming, there's dividends, there's exercise, assignment. What we do here with checklists, I'm going to tell you exactly what a checklist is. If you, again, hopped into a cockpit, or everybody in here pretty much has been on a plane, okay? The first thing the pilot does is sits down, okay? They turn on the plane and they take off. Not a chance. They go through highly detailed checklists. And when things happen in flight, they refer to the checklist. Most of the time, the good pilots, the good ones, okay, they actually know what they're doing, okay? They know how to react to all the different unique variables that they're going to encounter. That's what our checklists do, okay? TheoTrade, okay, builds the recipes. TheoTrade is the answer to the question, right? We'll tell you the right probability for the trade, okay? We'll tell you how many option contracts to trade for the account size. We'll tell you when to close the in-out spread, an exact percentage, precise. We'll even show you the right order type, okay? What if the stock sells off big? What's the correct return for the strategy? What if the stock rallies massively? Can I fix a losing trade? Trading, it's about the how, it's about the when, it's about the why, it's the what price. It's just the beginning of the variables, though, that you're going to face while buying an in-out spread. Okay, it literally is just the beginning of all the variables, and that's what criteria is. Listen, you can read what a spread is. When I say you can read what a spread is, you can go right now, you can Google, this is a spread. Maybe, okay, you might even know how to build a spread. What you don't have TheoTrade's recipe, okay? 20 plus years of trading experience. That's me, okay? I'm actually 22 years now in the business, but I also had access to client order flow for 15 years. And that order flow, okay, that is viewing and studying millions of different trading accounts. We know exactly what works and what doesn't. Ran education for 15 years, okay, at TD Ameritrade. Well, Thinkorswim, then TD Ameritrade. We had the largest options order flow in the entire industry, okay? And that is where much of this criteria comes from. Watching others' success and or failures, our own trading, okay? Criteria is your recipe for success. The following strategy, the in-out spread, and the corresponding criteria, pay attention. It requires, okay, the utmost attention to detail. You're going to go through a checklist, okay, because we spent years fine-tuning this particular trade setup and this particular criteria. And when you approach the section on criteria, follow the steps to build a trade, okay? The guide to small account growth with in-out spreads class. I am the trade instructor for this particular class. It's a 4-hour class. It's available immediately tonight. Why? We're in volatility right now. We're in volatility. Okay, the class is ready for you. It is what we term archived. The class slide deck that includes all the entry and exit criteria, the checklist, it's available immediately for you for download. The course is archived. Okay, it's 24/7 access. By the way, when I say the course is archived, we also have a mobile application here at TheoTrade for iOS and Android. So whether you're on an Apple device, Android, or you can watch it on any device. You can even watch it, okay, on a connected TV. So you could watch it on your computer, you could watch it on a connected TV, you could watch it on iOS or Android, any of them. You can even download, okay, this entire class and watch it, if you were flying, which nobody is doing right now, but you can. The course is $497. However, tonight, hang with me for a moment. We have a couple of bonuses for you, okay? And before I go any further, listen, I'm going to tell you right now, there's some key points that I want to make for this class, okay? The class, okay, is phenomenal. This one is, again, in terms of volatility, you have got to learn to mitigate that exposure. Now, before I go into some of the bonuses tonight, okay, and there's going to be a really huge bonus tonight, I also want to detail the curriculum for this class. So just briefly, we're going to go through the curriculum. Okay. In the small account in-out spreads. Okay. This class is going to take you through learn to construct in-out spreads. Okay. Easy to learn, easy to place. How to buy long duration options without paying more. Give yourself the gift of time. How to use defined risk reward strategies so you never have to lose sleep over your positions. This is critical. You're going to define your risk. Okay. Put the position on. The market could crash overnight. Okay. It could absolutely outright get demolished. In-out spreads, okay, are used in any market condition. And when I say in-out spreads are used in any market condition, okay, any market condition, but volatility is the way that we want to go. And I can't place enough emphasis on the idea that volatility, if you will, is the way to go. All right. So when I say volatility is the way to go, it's going to make your life substantially easier in this particular context. So with that, right, build your own in-out spread with detailed step-by-step entry and exit criteria. Okay, in-out spreads easily managed with set it and forget it order types. Again, set and forget kind of order types out there. Continuing on over here, okay, in-out spreads can be done with a trading account of $2,000. You do have to have $2,000 in the account. All the trades that we showed today can be done in retirement accounts, minimal options experience, smaller accounts, okay, or larger accounts. By the way, I don't care whether you have $2,000 account and $2 million in the account, okay. I like this because it's a little bit about, growth and strategies and so forth, but it's not critical necessarily that you have the $2 million account or $2,000 account, but know that every single trade I showed today is done in my retirement account. There's also a complete section in here on capital allocation. It's position sizing techniques to actually grow the account. Okay. Follow the recipes, of course, to be able to build the trade. Now, okay, as I mentioned, you want a bonus. All right. And I'm going to spend just a few more minutes on it. And then I promise I'm going to try to get to every single question because they're pouring in right now. And we have a tremendous number of people on tonight. And I'm going to try to get every single question. So listen, okay. TheoTrade, one of the things we designed here at TheoTrade, we go beyond one class or one indicator. What you guys have to understand about myself, okay, and everybody else here that works at TheoTrade, and I'm going to introduce, and TheoTrade is not about Don Kaufman, okay? We have 7 full-time instructors, and I'm going to introduce you, as I said, in just a moment to them. But we go beyond one class or indicator. Listen, having spent all that time in the brokerage business at Thinkorswim, and having spent all that time at TD Ameritrade, I have seen every class pretty much out there. I've seen people go out there and they go, well, I mean, listen, how many of you guys have actually bought a class somewhere? Okay. It's okay. I think that's okay to ask. You bought a class somewhere. Okay. You take the class, you pay $497 for the class, and then they go, then you have to buy an indicator on top of the class. And then after you buy the indicator, you have to take a class to learn how to use the indicator. And then you actually have to buy a subscription to their chat room because you learned how to use the indicator and their class. So now you have to actually trade with them. Okay. Does everybody understand what I'm saying over here? Okay. TheoTrade, we're not about that. We get this. Like when I say we get this, okay. When I left TD Ameritrade, we knew that we wanted to build something. Okay, that had everything. Everything you want to trade, everything you had to invest. I get it. Like you wanted it one place and you wanted it one price. And that, okay, is the introduction to these bonuses. The first bonus we have tonight is access to over 88 trading classes. Okay. When I say access to 88 trading classes, it's our entire library of classes. So do you get access, okay, to the in-out spreads class? Of course you do. It's archived. It's ready. But you also, on top of the in-out spreads class, which is the class, as we said a moment ago, it's a $497 class. On top of that, you're going to get Guide to Surviving and Thriving in Extreme Volatility. It was a $497 class, just taught like 3 weeks ago. Growing a small account with black book spreads. It was a course taught about 7 weeks ago. Okay, how to collect income being short. The next big short, that's the risk twist spread. Huh? I showed you the risk twist spread earlier. Guide to selling high probability spreads. Iron up, iron condors. This is selling premium, minimizing risk. Day trading, NASDAQ futures, covered calls. Essential skills for consistency in trading class. Top 10 skills. Pairs trading. People, I'm just, scraping the surface. By the way, I did not do the 88 classes. Okay, I did a lot of them, but I didn't do the full 88 classes. Again, we have 7 full-time instructors over here. Okay. At TheoTrade, we give you access to everything. We give you access because it's not, I'm telling you right now, it isn't right. It isn't right to do what? It isn't right to just give you the guide to in-out spreads and just be like, okay, it's $497, bye-bye. Okay, that crap is wrong. Okay, there's more than that out there. And you have to understand that there's more than that out there. And you have to understand that there's some background knowledge, okay, that you might want. Okay, and after that class, maybe you want to know a little bit more about technical analysis. Maybe you want to know a little bit more about the psychology of trading. We have it all. We're going to give you access to over $9,000 in classes alone. Nobody has anything like this. Okay, 88 courses. All right. By the way, the instructors. This is TheoTrade. Jeff Bierman, analyst, trader, and former chief technician. Okay, for TD Ameritrade. If you were on the Thinkorswim trading application, okay, a little debt of gratitude over to Jeff Bierman. Jeff built over half the studies on the Thinkorswim trading application. Okay, I obviously know Jeff from Thinkorswim and TD Ameritrade. Jeff is also, okay, a professor of finance at Loyola in Chicago. So Jeff moonlights with us here at TheoTrade, but you can either see Jeff at Loyola for $42,000, okay, a year, or you can get him here at TheoTrade. So that's Jeff Bierman. Next, Matt Williamson. He's our market neutral. He's a premium selling option strategist. For those of you that understand premium selling, this is your guy, Matt Williamson. Next in the list, Corey Rosenblum. Corey, he's our senior strategist. He's our resident swing trader. Okay, if you're into swing trading, okay, Corey's your guy. He's actually going to set up the swing trades, trend days, okay, range days. That's your guy. Next, Brandon Chapman, macroeconomics. Okay, so Brandon is our resident CMT. Actually, we have multiple CMTs here because Jeff Bierman's also a CMT. But Brandon Chapman, I'll give you his claim to fame. Brandon also worked with us at TD Ameritrade. And Brandon, okay, worked in the education group that we ran at TD Ameritrade. Brandon wrote a course, okay, for TD Ameritrade education. I bet you anything some of you took this course. The class that Brandon wrote was 18 months long. It was an 18-month course. It cost $24,000. And he'll be the first one to tell you what we offer you here at TheoTrade will absolutely blow it away. It'll blow it away. And you can pay $24,000 for 18 months of education. But I'm going to tell you right now, these classes will absolutely smoke, okay, what we used to charge $24,000 for at TD Ameritrade. Next on the list, Steve Slim Miller is a 43-year veteran, stock options and futures trader. I've known Slim actually since I'm a kid. Slim actually was one of the first traders ever on the Chicago Board Options Exchange. Okay, Tony Rago is a NASDAQ futures and intraday strategist. Last but definitely not least, we have somebody that literally trades with you all day, every day if you're into intraday trading. That's the first bonus. Again, access to 88 classes. Next, bonus number 2. All access TheoTrade VIP membership pass. It's free. We're going to give you 3 months, okay, full-blown access to TheoTrade. What's full-blown access? 3 months unlimited access. So you're going to have 3 months access to the 88 classes. You're going to have 3 months access to our live trading chat room. We're going to broadcast 6 hours per day. By the way, I ain't even close. There's another bonus coming. I'm just going to let you know because I see somebody getting antsy with questions over here. There's another bonus coming, okay, that's really going to blow you away. And we've never offered the bonus. And I'll tell you why we've never offered the bonus. Because the next bonus is a class. So wait for it because it's a brand new class and it hasn't happened yet. And it's coming. So the second bonus in here, we're going to give you access to TheoTrade and everything we do for the next 3 months. Live trading room. We broadcast 6 hours a day. The traders, okay, including myself, we give you real-time trade ideas. I told you a moment ago, every spread that I did, every spread, whether it was the risk twist spread, you saw a volatility spread, then I showed you all the in-out spreads, all of those were done in front, okay, of what is now 5,000 clients here at TheoTrade. We have actually hit now 5,000 clientele here at TheoTrade, okay? We do text and push notification of trade ideas. We send out a bunch of trades today, including in-out spreads. We have 5, okay, distinct trading portfolios. We have daily coaching sessions with timely topics each and every day. Okay. I do a lot of the trading. Jeff Bierman does a lot of the coaching. What is coaching? Okay. Jeff Bierman's a professor of finance. What's his strong point? Teaching you stuff. Okay. He's giving you literally college level courses inside of TheoTrade. People, nobody has anything anywhere near comparable to what we do here at TheoTrade. It's why we have 5,000 members here. And to kind of top this off, our instructors, including myself and Jeff Bierman and Brandon Chapman and Matt Williamson and Corey Rosenblum and Tony Rago, okay, all of us will directly answer your trade-related questions. We don't hide from that crap. We answer trading questions. You can say, is this a good trade? We're going to go, absolutely not. That's the worst piece of crap I've ever seen. Run! Like, that's okay. That alone, just the email, okay, is huge. We call this access to $997 in support, trades, and insight. Again, we're giving you everything that we do for the next 3 months. And you get to see all of the different classes over the next 3 months. And I'm going to get to, what happens after 3 months. I'm going to get to all of that. Okay. In addition, in this bonus number 2, we also give you access to 59 proprietary indicators and scans. We have auto expected move. We have gravity points. By the way, if you guys have tuned into any of the videos that we have over there, the gravity points, huge right now. Huge. The biggest. Okay. We'll give you the RSI or Laguerre, NQ levels, Quantix, okay, IV rank versus percentile. By the way, tonight, in just a minute, I'm actually going to give you the SPX expected move and a ton more. There are 59 indicators and scans. So we're giving you access to our chat room and our trade ideas. We're giving you access to every class. We're giving you all the proprietary indicators. We have classes for investment. We have classes for the beginners of options. We have classes on futures trading. If you name a genre of trading, we'll give you access to it. We're giving you access to these indicators, though. It's $1,800+ of indicators and scans. Now, okay, the last bonus tonight, I think you'll appreciate this one. Here we go. It's a live class. I'm doing it. We are going to run into a massive issue in the next couple of weeks in the marketplace, okay? It is crystal clear the issue that we're going to run into. That issue is going to be explained in incredible detail in a live class this Thursday. Okay. I am not waiting. Okay. I'm not waiting anymore. I was actually going to do the class tomorrow morning, but we figured, Thursday is going to be a little bit easier. Okay. Because I'm on late tonight. Listen, this is an emergency volatility crash course. Okay. There is going to be a massive shift in volatility coming, almost similar to what we just saw inside of oil. I'm actually the trade instructor. The class is live this Thursday, April 23rd. It's a 2-hour class. It's probably going to run a little bit longer than 2 hours. The class is going to be archived immediately. You're like, can I attend live? That's why I'm putting it in here. That's why we're doing this tonight. Okay. Not only do you get the other 88 classes, not only do you get the in-out spreads, the chat room, the everything. Okay. We're giving you this class, and we're giving you the class. Everybody needs to see this. Okay. What is about to go on in volatility is going to be as wild as what has effectively happened inside of oil. Okay. You're going to learn a little bit about placing volatility trades, trades like this. This is actually called the VIX volatility spread. I started with this tonight. It's how to put a trade on. Okay. Costing you next to nothing that can make massive, massive credits. In fact, okay, the trade I am specifically going to detail, this is a VIX trade. This is a VIX trade right there. Okay, this is your P&L, right? This is where the VIX is currently trading, okay? Minimal risk, absolutely massive returns possible. If there's going to be a spike, this is going to be minimal risk, okay, with an absolute grand slam possible in the marketplace, okay? And we're going to put this trade on for quite a substantial period of time. This alone, okay, is worth the cost. I mean, what we're doing here at TheoTrade, again, there's nothing comparable for any price. But I want you guys to know about the April 23rd class, okay? Because obviously we want you to enroll for TheoTrade tonight. Do it, okay? Now, at TheoTrade, we include everything you need to invest in trade, okay? What do we do? And I'm going to give you everything right here. Classes, coaching, email, access to the instructors, live trading room, okay? And live trades, indicators and scans, mobile access. It's everything you're going to need to succeed in this business. All right, what we've kind of built here is the Netflix for traders. And that's kind of what we call it. Every genre of trade. You name a genre of trade, whether it's pairs trading or in-out spreads, or I want to trade options or futures or stock. Okay, fundamentals. We have something for everyone. Tonight, it's $297 for 3 months. Before I go any further, it's $297 tonight for 3 months. This is not a membership. This is a one-time charge. We are done with the membership. We're doing a one-time charge. You get charged $297 tonight. What happens after 3 months? This is not an introductory charge. Everybody was asking me that. After 3 months, if you want to cancel, cancel. Okay, that's fine. You don't have to call us. Listen, if you don't pay us after 3 months, because this is a one-time charge, that's it. It's done. It's okay. I'll still love you in the morning, right? Listen, it's $297 for 3 months. If you want to do it again after that 3 months, it's $297 after that. And after that 3 months, it's $297. We don't have anything else, okay? We give people everything. That's why there's 5,000 people enrolled at TheoTrade, okay? So we give you the high probability in-out spread class. That's archived immediately. We give you access to 88 classes. We give you new monthly classes. By the way, the new monthly classes, when it's coming up, okay? It's April 23rd. It's Thursday. Why am I doing it? We got to learn this volatility trade right now. If you ever traded the VXX or the VIX, okay, or have ever looked at a volatility product, you do not do anything until you see this class on April 23rd. It's 2 hours, okay? It's not about being insightful. It's 2 hours that you're going to need to survive in this business, okay? We're also going to give you access to the live trading chat room. All right, we broadcast 6 hours a day. We give you real-time trade ideas, real-time market insights. We give you every indicator and scan. There's 59 proprietary indicators and scans. We email trade ideas, okay, 5 portfolios. We have daily coaching sessions and timely topics and stocks and options and futures. And, okay, to top it off, all the instructors will directly answer your trading questions, okay? And I like to put it, trading questions. You can ask any question you want, but if you have a specific trade that you're thinking about, bounce the idea off of us. That's what we're here for. Listen, go now to enroll for it. It's TheoTrade.com/IN. Okay. TheoTrade.com/ okay. It's in. N as in Nancy. TheoTrade.com/IN. Now, okay, on top of all of this, and again, don't forget about the class that's coming up April 23rd. Top of all of this, we're going to make this a completely riskless trade. Everything you need to start from absolute novice to expert. When I say novice to expert, I also want to reiterate something. I'm going to bring you to this here in just a moment, but I'm going to pop it up right now, okay? If you are brand new to this business, as some of you absolutely are, okay? You're brand new to this business. This is the Start Here menu, okay? Novice, Options 101, Options 201. I'll come back to this here in just a moment, but I wanted you to see that. We give a money-back guarantee on it. And the money-back guarantee is really simple. Trade with us over the next 3 months, okay? Trade with us for the next 3 months. If you're not completely satisfied, just email support@theotrade.com. Provide us the details of your trades, receive a full refund. I'm also going to make something clear. We don't define what satisfied means. Okay, listen, the whole entire thing costs, well, let me put the correct color up here. The entire thing is $297 for the next 3 months. If you're not happy, don't worry, we'll give you $297 back. Say it's not worth our time, okay, to argue over $297. Listen, there's money back guarantee stipulations. I go through this because I want to make it fair. You got to do 10 trades, okay, using in-out spread criteria in the next 3 months. You got to do 10 trades. I will do more than 10 trades in the next 3 months. Okay. Number 2, your initial account value must exceed $2,000. Okay. You have to have $2,000 in your account. Oh, and you must follow TheoTrade criteria. If you have to either follow our trade or follow our criteria, you can't go out there and be like, I bought me a call. It didn't work. Please make it fair. Okay. If you're not satisfied in the next 3 months, all right, provide real account statements. This ain't paper trading, people. We'll give you your $297 back. And we do this because we don't want anyone, okay, at TheoTrade that isn't happy with TheoTrade. And it's the most important thing to me, okay? And by the way, if you're having a tough time, email us. I'm telling you, I don't shy away from some of the email stuff over here. But, oh, don't email me. Email us at support@theotrade.com. Okay. The moment you email us, okay, we know that you have an account with TheoTrade. All right. It actually brings up all of your previous emails. Okay. So we know who you are, what you're doing, and so forth. That's great. And we can actually help out. We want to make sure that you're satisfied. That's why we say this. But if you're not satisfied in the next 3 months, get your $297 back. Listen, get into TheoTrade now. We're going to work with you directly. Tonight, we will do only 30 spots on the riskless trade deal. Why do we only do 30 spots? Okay. Do you have any idea how many account statements we get sent to us? We do unlimited email mentoring. Send us your trades. We do 30 spots on it tonight. The first 30 people to enroll tonight get the riskless offer. The $297 offer has never been available before, especially considering, okay, we give you the access to every single class, and we're going to give you the April, class as well. Now, okay, I'm going to answer a couple of questions here momentarily. What our members are saying. This comes from Brian, okay? This was on March 16th. Wow. I want to again say thank you, okay, for what you have taught me in the last 2.5 years, okay? I bought into what you taught about risk twist spreads and duration positions and started to trade options almost a year ago. I missed out, okay, on the last market move up, okay? But at the moment, my IRA is up 14.8% for the year. What I've invested in TheoTrade has been so worth the money. Thank you, Brian. And I wanted to show you this, and I'll tell you why I wanted to show it to you. That one was actually dated right there, March 16th. Okay. On March 16th, this gentleman was up 14.8% in the middle of an absolute outright crash. This one comes from Chris on March 26th. Don, I've learned more in the past 4 weeks, okay, managing and defending my portfolios than I've learned in my entire trading life. Nothing I've learned would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge took a large sting out of my long-term IRA destruction. Okay. You clearly don't have to be a teacher, but thank you for doing so. Stay safe. This is from Chris again on March 26th. Listen, this just details everything. TheoTrade. This is the access you get today for $297. And that's it. It's $297 today. It is not a membership. Okay. Guide to small account growth. Okay. The first bonus in here will give you all access pass. It gives you, again, the live trading chat room. Okay, text and push notification, access to the archive, all the trading indicators and scans. Okay, the coaching sessions with 10 hours of live support. Bonus number 2 over here, of course, is access to TheoStream. It's 88 classes. 88 classes. I'm going to show you in a moment. It's day trading and swing trading and technical trading and beginners options and advanced options trading. Okay, pairs trading, new monthly classes. Okay, the third bonus, as I'm going to detail once again, the third bonus is a live class. Again, it's a live class this Thursday. Okay. This Thursday, it's a 2-hour class. Go to theotrade.com/IN. In fact, everybody needs to go here right now because I'm actually going to show you where the SPX expected move link happens to be. So once again, we're going to go to theotrade.com/IN. And I just want to bring you to that particular site. I'll pop up the website here momentarily for you. Okay. What I wanted to detail on this site, again, it's theotrade.com/IN. Our email address is right here. Okay. Support@theotrade.com. Again, support@theotrade.com is the email address. This is the guide to small account growth with in-out spreads. There are currently 30 riskless spots available. In addition, okay, to everything that I talked about tonight, this is the bonus. It's an emergency volatility crash course. You must attend this one live. It will be archived, okay? But I'm telling you, you have to enroll for it tonight, okay? Because the class is coming April 23rd. It's again, it's 11 a.m. Eastern time. It's 10 to 12. Again, 10 to 12 Central time. So in this particular page, go to theotrade.com/IN. If you scroll to the bottom of the page, again, scroll to the bottom of the page, there is the SPX expected move indicator. Now, those of you that are enrolling for TheoTrade, okay, don't have to worry about the SPX expected move indicator. We give you the indicator along with every other indicator directly in the TheoTrade site, okay? To enroll for it, okay, go right here to click Add to Cart. When you click Add to Cart, it'll actually pull up, okay, our page that is going to detail all your billing information in here. Okay. Here's everything that you get. In addition, we have, again, the class coming up this Thursday. The reason I'm pulling this particular page up, this is a one-time charge. This is not a membership. And it's about the sixth time I've said that because everybody asks us that question. Now, I'm actually going to pop back over to here for a second. I'm going to answer a few kind of generalized questions, but I also want to show you, this is TheoTrade. If you want to see what TheoTrade looks like, this is actually our chat room. This is where we broadcast every single day. So on a day-to-day basis, we broadcast right up here. This actually turns in to my screen when we go live, okay? And you can see this is the emergency crash course to volatility. So right in here, this is where you'll actually attend the class. This is the chat room down below. Okay. When I say the chat room, all of our clients can interact with one another. All right. Today we had over 3,500 people in this chat room. So over 3,500 people in the one chat room, literally today and today alone. Now, that's where you actually are going to see the live broadcast. But what else do we have? As I said, we have a start here menu. If you're brand new to this business and you're like, where am I going to get started? Start here menu. Okay, start here, options 101, 201, 301, okay, order execution. Everybody should watch the order execution. We have a crash course in option Greeks, getting your risk under wraps, what products to watch and why. That's just the start here. From there, okay, let me go over here and show you some of the classes. All right, there's 88 classes. All of the option classes, okay, and all of the classes, they're broken down into different genres of trade. So we have option strategy classes, option newbie classes, technical analysis, day trading, stock classes. Because some people are like, I'm not an options guy. It's fine. We have stock classes, futures classes, hedging strategies, trend trading, pairs trading, mindset. We actually have psychology classes. There's one psychology class in here. Originally, we charged $1,000 just for the one class in that psychology. But if you want to see some of the classes in here, I'm actually going to click on all the option strategy classes. Okay. How many classes are actually in here? There you go. Okay. Selling options for a living. Got guide to maximum edge trading earnings. Here it is. Guide to small account growth with in-out spreads. Okay. Guide to surviving and thriving in extreme volatility. The black book spreads class. You go out there and you buy each individual class a la carte. It would cost you probably $8,000 to $10,000. We give you access to everything on a stream. Everything. You can download it onto your mobile device. Okay. Everything for the next 3 months. Right. And of course, we also have a full search engine. You're like, I don't know. Okay. I want to sell puts. Okay. You want to learn to sell puts? Go ahead. Go search for it. So you're actually going to bring up when to sell puts, how to sell puts. Here, coaching session. Okay. Selling puts to acquire long stock. You name a genre of trade, it's in there. It's in there. Again, I'll pop open this address, TheoTrade.com/IN. Click add to cart. It's $297 tonight. In addition to all of it, you're going to get the volatility crash course and you can attend live on Thursday. I get it. If you can't make it live Thursday, okay? If you can't make it live Thursday, the class will immediately be archived in there. And I put so much stress into this volatility crash course because we're right on the verge of a massive volatility break right now. And you got to get involved in it. In fact, I'll tell you what, if you're in the chat room tomorrow morning, I will give you the trades tomorrow morning in the chat room before the class even happens, because I am that nervous that something could happen, okay, in the next 24 to 48 hours. So again, I want to push as hard as I possibly can on the volatility front right now, because there's a whole lot of issues, people. Now, let me answer some questions for you guys. Again, I popped the address up here. All right, TheoTrade.com/in. It's down at the bottom of your page. A couple of questions, okay? The first one, by the way, I'm some generalized questions, then I'm going to get to some of the really specific questions inside of the chat room here. One of the first things is people always ask us, like, what do you need? I say you need a laptop and an internet connection. In fact, you don't even need a laptop anymore. The trading off of like an iPad is pretty phenomenal these days. Okay. We have everything you're going to need to get started. And I'm going to tell you something. If there's something that you need that you don't see here, I want to know about it. That's what we do. Okay. That's our job. And we have a great relationship with brokerage firms, which I'm going to talk about here momentarily. So from absolute novice to the most extreme trader, I don't care if you've got 30 years under your belt. I'll tell you what, 7 okay, full-time instructors here are constantly working on pushing the edge of the envelope. The second thing, okay, and I've been just detailing this time and again, okay, this freaks everybody out. This is not a membership. You will not be auto-renewed, okay? You're not going to be billed again. If you want to do TheoTrade another time, that's fine, okay? In 3 months, you decide it's $297. You don't want to do it? That's fine too, okay? It's $297. TheoTrade archives everything. Every word that we speak, we archive it. We understand not everyone can catch live trading. Not everybody can actually catch the class that's coming up here April 23rd. But I bet you what? This is actually the first time that I have done a class during market hours. And you're like, well, why are you doing that? Because I know something. Everybody's home. Okay, for the most part, people ask me to do it during market hours. Okay, everybody's home. I got nothing to do on a Thursday morning. Go for it. I'm going to do a class. Okay, there's no additional cost for the class. It's $297, but that gives you access to everything in the class. Okay. Number 4, we're going to give you access to TheoTrade Mobile. And you can get it for iOS and Android. Download stuff, view it at your leisure. Oh, you know what else is cool on TheoTrade Mobile? You can actually speed stuff up and watch it at like 1.5. I sound like a chipmunk, but it's good stuff. So you can actually speed it up, slow it down. Okay. Number 5, you can email us anytime and receive a response within 24 hours. You can actually ask us trade-related questions. We do not hide from stuff. When people say like, so I was thinking about doing this IBM trade, we're like, no. Okay. You could say, hey, bullish, bearish. It's tough sometimes. I don't mind telling you. I have no feel for that marketplace. Okay. Listen, we're traders. We're going to help you out to the best of our ability. Okay. And that means we're going to answer your trade-related questions. Number 6 over here. You're going to gain access to every course that TheoTrade has done in the previous 4 years. That's where 88 classes, soon to be 89 classes, comes from. Classes, coaching, live trading sessions, everything is searchable. Name any trading topic. We've got an archive on it. Number 7 over here, all trades can be done inside of an IRA or retirement account. All of them. I trade in my retirement account on a day-to-day basis to assure you of that with as little as $2,000 in the account. Number 8, we can help you get approved for options trading. Okay, if you're having a difficult time with a brokerage firm, we will help you. I don't care whether it's E-Trade. I don't care whether it's Ameritrade. I don't care whether it's Interactive Brokers. Okay, whether it's Charles Schwab. Let me tell you something. E-Trade. Okay, one of my best friends runs options strategy at E-Trade. Okay, I've known her for almost 20 years. Obviously, some of my best friends actually run part of TD Ameritrade. A gentleman that used to work directly for me, he actually runs part of Charles Schwab right now. You go to any major broker, any major brokerage firm, Tastyworks. Guess what? Okay, I worked for the guys that started Tastyworks for 15 years, side by side with them. Any of the major brokerage firms, we have access to them. Okay, and we have a lot of influence with them. Next one, number 9 over here. Remember, there are 30 riskless spots available. I don't know if there's 30 riskless spots available anymore, but there's 30 riskless spots available. Okay. You want to get results, take action, enroll for it. Okay. Enroll for it. We have a class coming up literally this Thursday. Go to theotrade.com/IN. Now, I am going to answer, okay, a bunch of questions over here that are coming in, and I'm actually going to answer directly from the chat room right now. By the way, I love this. I wanted to throw this up here. By the way, you guys are rocking it. Very impressed. Okay. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for me and for life because of this approach. And I'm sure I'm not the only one. David. Okay. I love that one because that's what we're about. This next one over here. I'm very impressed with TheoTrade. I've studied under stock coaches, various, strategy intellects and different, trading plans. I have not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful and extremely knowledgeable. I'm looking forward to this association for years to come. Don's the most knowledgeable person I've ever heard in my 50 years of stock investing, and I've listened to many. His knowledge of how the markets is like sitting next to a finance PhD. Highly recommend learning what this man has to say. I just wanted to throw this up over there. All right, let's get to some of the questions that are inside of the room. Again, pop over to this particular trade. Okay, it's theotrade.com/IN. As you guys actually are enrolling for it, I'm going to answer some of the classes. Again, the first one is, okay, again, let me reiterate this because I think it's important. Okay, the class that's this Thursday. Okay, you can attend live. It's in the chat room. Okay. It is Thursday, April 23rd, 11 a.m. Eastern Time. The class will immediately be archived. You don't pay anything extra for it. It's just part of the $297. Just click add to cart right there. Okay. Some of the questions that come into here. Okay. First one. Can you do option trading with less than $2,000? The answer is yes. You can trade options with less than $2,000. However, okay, you're going to have to open up a cash account to be able to trade spreads. There are some funky rules about that. All right, so you have to be careful with that. Next one. What does contrarian mean? Contrarian means taking the other side. When I say taking the other side, when the markets are selling off and there's blood in the streets, you're buying. Okay, when the markets are rallying and everybody's like, yeehaw, we're going up, you're getting short. Okay, that's kind of what contrarian means. All right. Somebody said, Casey actually asked, what if he bought two, opposing in-out spreads? Don't do that, Casey. There's a strategy where you can actually trade on both sides of the marketplace. Okay, there's a strategy where you can trade on both sides of the marketplace, but you do not want to do it with in-out spreads. And we will actually detail that particular strategy. You can actually do what's called a buy-side iron condor to trade on both sides of the marketplace. By the way, I want to get to this one. The brand new one just came in. It says, I've had success for the past year and want to trade $500,000 account full time. Okay. What's the probability of me generating $15,000 per month of income using TheoTrade? This is actually from Tom. Tom, okay, I'll tell you what. If you're going to sit there throughout the course of the day, and I don't mind saying this, you're going to sit there throughout the course of the day, the learning curve, okay, we're going to beat you up for a couple of months in the learning curve, okay? If your ability is there to sit for portions of the day, absolutely, with $500,000, okay? When I say absolutely, I started tonight, I showed you my account. I had $700,000 in the one account, and it's up that this week, and it's only Tuesday. Okay. And that's $15,000 a month is not going to be an issue with a $500,000 account. And I'll tell you right now, I'm not using in the $700,000, I'm not using but $70,000 of buying power right now. So Tom, I hope that makes it kind of clear in there. I'll be happy to show you. By the way, full detail here. We show everything. When I say we show everything, I'll show you every account, every statement, every good trade, every bad trade. This is a full disclosure place. Okay, none of the instructors hide anything. Okay, this is, you want to see the full Monty, you're going to see it. You're going to see us sometimes, hey, strategies don't work. I'm going to fall flat on my face. Okay, this is about longevity. It's about making money over time. Okay, not everybody has every single trade going well. And if anybody ever tells you they are, okay, they don't understand trading. Okay, this business is deeper than that. All right, next one comes up in here. Do you share all the trades you're making with your members or only share some of them? Okay, that's from Henderson. Henderson, okay, I share everything I do now. Everything, okay? I will tell you one aspect, though. Once in a while, I might wake up at 3 o'clock in the morning. I can't sleep. There's a screaming kid or something. I have a 5-year-old, a 7-year-old, and a 10-year-old. If I'm up, I might actually scalp futures in the middle of the night. I'm just being honest with you, Henderson. I may trade in the middle of the night. Okay, I do that from time to time, and I do it just because I'm up. So that's the only thing I wouldn't show necessarily live, okay, unless you really want me to broadcast in the middle of the night. You know, I kind of get that, but yeah, that does not go over well with the wife. Anyway, the next one in here is okay. Oh, what's the edge? That comes from Vernon. Vernon, edge. Edge can actually be a really wide variety. Okay, edge in this trade has to do, okay, with probability of profitability. Basically, with this trade, the in-out spread edge, okay, the in-out spread edge is about occurrences. So I'm going to give you the 2-second version, Vernon, because I'm way over in time already. So here it is. 100 trades, okay? Let's say over the course, okay, of the next 2 years, you do 100 trades. We realize that X number of trades are going to be losing trades. We realize that X number of trades are going to be winning trades. The key to the in-out spread, okay, the probability of hitting your profitability point, okay, far exceeds the probability of taking the full loss on the spread. So the edge comes in actually the structure of the trade. Like people look for like a mathematical edge in pretty much every single trade. This one, okay, will actually detail that in the course itself, where it actually talks about probability of profitability. Okay, I don't want to go too far in there, but the probability of hitting profitability, okay, is anywhere from about 63% on up to about 75%, depending upon the structure of the trade. Vernon, I hope that helps out a little bit over there. Mitchell said, how do you know what time frame to use? Mitchell, you go through the class. Mitchell, I'm going to mess with you for a second because that's exactly the right question. You have to get the time frame of the in-out spread perfect. You can't screw this up. And I'm going to tell you right now, if you go too far out in time, the trade won't work. If you go too short in time, the trade won't work. If earnings are coming, you could blow yourself up in the trade. Okay, you have to know the right time frame. We actually detail all of that. That's actually what the criteria is. Okay, continuing on over here. This one comes from Anthony. Isn't the full risk reward only realized at expiration? Anthony, absolutely. Okay. So I made it easy in tonight's kind of course going through for like full risk and full reward. You're not going to take a full risk on this, and you're also not going to achieve the full dollar. It's not really going to be like $1 to $1. You're going to be making 55%. You're going to be making 30%. Okay. And we're going to also mitigate some of the risks in there as well. So you're exactly right in there, Anthony. It's actually good. Darius, what happens if you get assigned in the shares? Okay. Darius, you're never going to get assigned on it. So we actually circumnavigate assignment because we don't ever allow the options to go that deep in the money. That one's pretty easy. If you do get assigned, it's actually a good thing. I'm going to say that again. Assignment on an in-out spread is a good thing because if somebody calls the position away, then you can actually turn around and exercise your option. By the way, exercise your assignment at most of the brokerage firms now is free. All right, before I answer any more questions, okay, a lot of our riskless spots are filling right now. There are 30 riskless spots. Okay, I'm just glancing right now. Daniel M. from Illinois. I'm just thanking everybody that's enrolled. Daniel M. from Illinois, KCC from California, Paul S. from Colorado, Bazad from Canada. By the way, if you're from Canada, we'll talk to you about brokerage firms because in Canada, the brokerage firms can be a little bit trickier. Okay. Danny U from Texas, Abel C from Arizona, George W from Florida, Gordon G from Illinois, Thomas S from Colorado, Robert W from California, John C from Oregon, Lawrence F from Texas, Dennison L from Alabama. Two of our instructors are actually from Alabama. Lloyd T from Utah, Willie R from Maryland, Alan G from Pennsylvania, Tim W from South Carolina, Bill A from California, Randolph from Texas, Eric from California, Tom D from New Jersey, Vernon V from Massachusetts, Hillary D from California. Okay. I'm going to butcher this name over here. I'm going to call you Alex from Colorado. I apologize now. I'm a butcher of names. Okay. Sheila K from California, Jerome M from Ohio, John H from Texas. There's only 3 spots left. There's literally, I'm counting at the same time. There's only 3 spots left on there. Okay, a couple of more questions, and then I promise I'm going to wrap up. I like to stay here. As I said, I'll answer emails for 6-7 hours a day. I'll answer questions. What do I have right now? I have 3 little kids downstairs and a wife that's probably very unhappy with me. I'm going to stay up here all night and answer questions. This is a hell of a lot easier. Okay, it's terrible. It's a little bit true, though. What is this? 6 weeks of seclusion without kids in school? It's scary. Okay. All right. Okay. If we sell a call and the stock later is above the 33 strike, does anything happen? Okay. No, actually, Hill. So if you actually sell the call and the stock gets above 33 strike, okay, the stock would have to go way beyond the short option for you to be assigned. People are always worried about assignment on options. Okay. One thing I'll tell you, when I'm building the criteria for these courses, okay, and I'll tell you what, we spent a lot of time and a lot of money building the criteria. When we built the criteria, it's designed to not allow that kind of assignment. It can happen, but I'm going to tell you right now, again, if you're going to be assigned, okay, 99% of the time, it's a good thing. It's actually a good thing. By the way, if you're assigned, it also means you didn't follow something in the criteria. Okay, so it's good. That's good. By the way, somebody was asking about commissions. Commissions are the same now for everybody. It's 65 cents. I don't even have a special commission deal anymore. I used to. Okay, commissions now, dirt cheap. Okay, free stock options are dirt cheap. we're living in utopia right now. Okay, somebody said, Daniel said, can you help me get approved for option spreads at TD Ameritrade? Yes, we can. But Daniel, there is one thing. At TD Ameritrade, to do option spreads in a margin account, you have to have $2,000 in your margin account. We absolutely can walk you through it. We have connections, again, at all the different firms, and we work with all the different firms. Like this is kind of unusual here at TheoTrade, but when I say we have relationships with these firms, okay, if there is not a week that goes by that I personally will not talk to, okay, one of the CEOs of a major brokerage firm. Not a week goes by. I mean, we talk to everybody in the brokerage business. So when it comes to an education firm, all right, we have over 5,000 clients. And those 5,000 clients, we trade stocks, options, futures. The brokerage firms absolutely love us, okay, love us. So we'll definitely help you through that. All right. If I'm playing the bullish side, this one comes from Nadeem. Nadeem, if I'm playing the bullish side, okay, then I want my price on the stock and the index to go above the buy side. Actually, Nadeem, you want both of the options to go in the money. So let's say the stock is at 100, okay, and you do a 99-101 spread. You want that stock to go up, even to 110. It's fine to make your profitability and to bail out. Okay. Once the stock starts going up, though, most of the time you're bailed out pretty early of it. People, I think I got almost all of them. Okay. Oh, I like this. Do you use the futures market to predict if you buy a call or put? So Danny, okay, the futures market isn't necessarily that. I actually use futures throughout the course of the day to get a great feel for markets. So I think you'll find that kind of interesting. And if you are interested in trading, okay, if you're interested in trading on a day-to-day basis, I also trade intraday in the chat room. So I don't do it every single day. Listen, sometimes I'll buy a call or buy a put for that trading session. We hit a home run in Microsoft last week. Okay. By the way, Yvonne C from Illinois, thank you. Okay. Jeff P from Virginia. There is one spot, literally one spot left on the riskless deal. And again, don't forget, because I want everybody to be there live. The emergency, it's a volatility crash course. Okay. Listen, everything that you need to know about volatility is coming on Thursday. But the reason I'm doing the class is, okay, we're right on the verge of melting down in terms of volatility. And there's going to be some opportunities, okay, but we got to get through some of the risks, some of the nuts and bolts of what you're really trading with volatility products. Listen, again, I want to thank everybody for joining us tonight. Please go to theotrade.com/IN. Again, it's theotrade.com/IN. Okay, you can email us support@theotrade.com. Even more importantly, right here, you can contact us. You can chat literally, okay, with Stacy and Jeff, okay, and JP. That's actually a live chat, so you don't even have to email us right now. They're there, and they're there live to be able to answer some of your questions. Okay, theotrade.com/IN. Enroll for it. Click add to cart. Listen, everybody, stay safe. Okay, if you're around tomorrow morning, jump in the chat room. I am going to kick off the chat room tomorrow morning, okay, at 9:22 Eastern time. That's about 8 minutes before the cash open. Join us live. Hop in there into the chat room. Hey, I'm new here. Okay, there are thousands of members in there that are more than happy not only to help you, but they'll actually give you the links. They'll give you everything you need, okay, to kind of get started in this. We're going to be there to answer some questions tomorrow morning as well. And of course, the class coming up this Thursday. Thanks, everybody. Please stay safe out there. Have a wonderful evening. Bye-bye.